Thank you so much for coming. So this talk is about this idea of how you could measure if some agents in a DeFi protocol could be manipulating the mechanism, but the idea is more general. And in some sense, the inspiration for this type of work is the traditional economics. You have this idea of having a mechanism as being like an entity that's trusted to implement some allocation or a payment. So for example, in an auction, you're assuming that the auctioneer is going to implement the auction honestly. And the mechanism is simply receiving data and is this enshrined environment that's going to make some computation and give some outputs. And this idea of MEV is basically a violation of this trust assumption. So one example of where that happens in DeFi, so we have decentralized exchanges where these are environments where traders, they send their transactions to a sequencer. The sequencer is supposed to pick an execution order for trades, and there is this assumption that the sequence is going to implement the ordering of transactions in a fair way, where an MEV is basically a deviation from this trust model in the system. And we see this happening since the rise of DeFi. This has been a constant problem in the field. So the research question that we look to ask in this work is how we can define manipulative behavior in a multi-agent system more broadly, not only for DeFi. And given this definition, how can we actually measure that if you cannot really have a system that's completely manipulative resistant, how can we actually measure if a system is close from being non-manipulative? So to answer the first question, so we first propose like a definition for this. So for example, one idea of having a game that's non-manipulative would be if for every player in a game, for every player A and B, if you have some player A that prefers that player B participates, then player B weakly prefers that player A also participates. So that's an intuitive definition of what a game would, non-manipulative game would look like. And there's some games that will satisfy this property. So for example, a cooperative game is an example of a game that will be non-manipulative, right? For them, imagine you're having a public project where the game simply consists of agents depositing money in a public fund to build a public service. In the outcome of the game, the utility of every agent is increasing as agents participate. So a cooperative game is a classic example of a game that you're not going to have manipulation. First price auctions, in some sense, they also satisfy this notion of not being non-manipulative, because imagine in a first price auction, if you have the highest bidder is winning an auction, the auctioneer really wants that bidder to participate, right? Because that bidder is the one that's winning the auction. And that bidder that's winning the auction, he's indifferent about any other agent participating ex post, because the payment that he's making is independent of what other people are bidding the auction. So an example of a mechanism that would be manipulative, on the other hand, would be a second price auction, and that's a well-known fact in auction design, where if auctioneers can be colluding with buyers, then the auctioneer weakly prefers that the highest bidder of the auction is participating, but the highest bidder weakly prefers that colluding bidder with the auctioneer was not participating in the game. Okay, given this definition of a non-manipulative game, it's inevitable that some games, they are gonna be manipulative because it might be just the nature of the game you're playing. For example, if you're trading, there is trading by definition is not a cooperative game, but how can we understand how close is that outcome that we observe close from being a non-manipulative game? And that's when we ask this question, how we could measure the outcome of the game to understand how close it is from being non-manipulative. The case study that we focus here is on decentralized finance, and there's some very nice aspects about it. One is because all data in decentralized finance is public, all the data that you see in the chain, so you actually can observe the outcome of these mechanisms and actually create measurements on the outcome of the mechanism to try to understand how close that outcome close from having manipulation. The bad side, however, is that in centralized exchanges, we have seen very strong incentives for manipulation. So if you go in the data, you're literally going to see, we have seen examples today of this problem. And another challenge in decentralized exchanges is that it's very easy for an agent to attempt to hide the fact that they are manipulating users, because this idea of having pseudonymous identities makes it easy for you to hide the fact that you might be manipulating someone. So let me give you an example. So again, that's this traditional sandwich attack that we have. So in a sandwich attack, the intended behavior of the game was a trader is going to send a transaction. And let's say the trader wants to buy some token. Well, that makes the price of the token go up. But what happened in a sandwich attack is that the user transaction TU is being sandwiched between a transaction T1 and a transaction T2, where the attacker is the entity that's controlling transaction T1 and T2. So now we could look on our definition that I just gave you. Okay, why is this outcome manipulative? Well, because the attacker weakly prefers that the user is participating in the game, and the user would weakly benefit if the attacker was not participating in the game. So this does not satisfy our definition of being non-manipulative. However, there is a reordering of trades that would make the outcome of this game being non-manipulative. For example, if you have this reordering of trades, you'd observe that the game now is non-manipulative, because the attacker now that controlling transaction T1 and T2 is indifferent about the user participating in the game. Because the user transaction in this example is the last one to execute. The attacker doesn't care if the user transaction is executing. So this showed that for this particular sandwich attack, we can indeed build outcomes of the game that would satisfy our notion of being non-manipulative. The question is, in practice, agents are not ordering transactions in this way. They can be ordering trades in any way they want, these block builders. And we want to understand how close is the outcomes of these games being in this fair outcome. So the standard approach to detect manipulation in DeFi, we might look for the sandwich pattern. So we are looking for patterns of buys, followed by buys, and followed by sells. However, the challenge here, recall I mentioned the challenge of DeFi is that it's very easy for agents to hide the fact they might be attacking someone. So for example, here, if transaction T1 and T2 are controlled from the same agent, but they have different identities, that would make it harder for you to detect this attack. You can also add noise in the actual volume of the trades to hide the fact that they're buying and selling the tokens. So a robust measure, so a measure should be robust to an attacker that might be trying to hide the fact that they are manipulating the system. So what we do here is that we follow the following mental model. So we have this game where sequences are picking trades by following some strategy. We don't know what that strategy is, right? So that's the whole point. And from that strategy, he's picking, constructing a block of trades, or like an execution ordering of trades, and that's going to execute in the exchange. And we are going to look on the only in the information that's in the block, which is the execution ordering, and build a metric from that execution ordering. And the goal of this mechanism is to classify if a sequencer might be manipulating trades or not. So the formal model that we do is essentially what we do, we look on the execution ordering of trades. The execution ordering is going to define the sequence of prices, how prices move on the actual blockchain contract. So it's just variable pi of t is the if price of the token of the asset you're buying or selling after the if transaction in the execution ordering t executes. And our surveillance metric is the metric we are going to compute, essentially this variance-like quantity. So we basically look on the how prices vary in the block. Relative to the initial price in the block. So this essentially look like a variance metric. And the intuition is very simple here. Like you have that in the third case, when you reorder trades, that variance metric is going to be smaller than it would be on the second case. And the question is, we want to build a benchmark to compare how much a surveillance metric we observe is relative to what a good metric would look like. And what we do is we normalize the metric we observe by the smallest metric that we could obtain. So what we do is, so look on the actual execution, the metric compute from the block with this quantity st, and then you can compute some reordering t star, which would be a reordering that would have minimized that metric. And then you divide the metric you observe by the ordering that would have given the smallest metric. So essentially, this is a quantity that's always bigger than 0. So our first result is the following. So we showed that there is always a game that would output. So for this decentralized exchange model, there is always a game that would output the ordering that minimizes that metric. And that comes from that old work that Lily mentioned, this work on sequencing rules. So in this paper with David Parks, we basically propose a way that you could reorder trades in a verifiable way. And this sequencing rule has this property that this sequencing rule is essentially a class of algorithms. And one thing that you can show is that there is one particular algorithm on that class that would always output ordering of transactions that would minimize the surveillance metric that I just gave you. And let's say again, recall why. So recall here the example of the sandwich attack that I mentioned. So we have a user trade T2, where before the transaction for the user executes, a transaction for the attacker is executing, and immediately after the transaction of the user, the attacker sells. With the sequencing rule, I'm not going to define what the rule is, but essentially you can guarantee that any ordering that you're going to have is going to satisfy that definition of being non-manipulable. In the sense, recall the definition says if for any user transaction that the attacker benefits, he would be less happy if that user transaction was not executing, then that user is actually indifferent about the attacker including their transaction in the block. That's essentially what's happening. And here's, I can recall, because the user transaction T3 is the last one to execute, therefore the attacker is indifferent about the user transaction executing. Now let me give you, so I gave you a theoretical motivation, why is that a good metric? Now let me give you some empirical work we did on that metric, where the goal now is to understand how we can compare different sequences. Because essentially, each sequencer is running their own game of building blocks. And we want to understand which ones might be manipulating blocks more than others. And what we do, we build a data set from execution orderings from 2022, September 15, 2022 to August 7, 23. So there's almost 8 million transactions and more than 6,000 exchanges. And here you have just a distribution of how what the batch sizes are. And here is just the mental model you have to have is that what we have is essentially many sequencers competing for the privilege to sequence transactions. So there is many games happening where different sequences are sequence transactions, and now they're competing to decide which one is gonna really be the one to sequence transactions. That's called the MEV Boost auction, which is currently most blocks in Ethereum. They are built. They participate in this auction, and only the highest bidder or the highest sequencer that bids on this auction gets to actually sequence transactions. So now one question you have to have in mind, well, we're computing a metric. What's the base benchmark, right? I'm just give you a number. That number you give is, I tell you, is that high, is that low? What's the benchmark to compare? The benchmark one benchmark we study here is this idea of altruistic orderings, which are essentially orderings that do not participate in the MEV Boost auction. And that's going to be the benchmark we use. And the intuition here is that, in general, it's always a dominant strategy for builders to participate in the auction, right? Because if you think you can get, say, value X from your block, you should always bid X as the reserve price if you are a proposer of a block. So it's always a dominant strategy for every block proposer to participate in the MEV Boost auction. In fact, around 14%, only 14% of the blocks do not participate in that auction I mentioned. And now what we do is we look on, for each sequencer, you can look on the orderings that sequencer actually built, and we compute this empirical average over all the bundles that sequencer builds. And here you already see a difference for the surveillance metric. So the surveillance metric is this graph in the middle here, where you clearly see that the altruistic sequences, they have a much smaller metric than the ones that participate in the MEV Boost auction. So there's a very high difference between the builders, the blocks that are entering the MEV Boost auction. So we can break this a little bit more and actually look on the dimension of the individual builders. And here you see that every single builder is above our benchmark. So every single builder, even the standard Ethereum implementation has a higher surveillance metric than the benchmark we propose. So this is just an evidence that this metric actually allow you to compare these different builders. And recall this metric could be as small as 0. So not even our benchmark really have a metric of 0, because we are not expecting the agents to be using the grid sequencing, the sequencing rule that I mentioned on. And therefore, even on average, blocks are not going to have a surveillance metric of 0, but that's enough for us to allow us to understand what's the builders that are extracting higher value from users. So another dimension is to actually look on different relays. Here we have different relays. Again, the altruistic are the ones that do not participate in the auction. One interesting case is the blocks route has an ethical relay, which indeed is the one that has the smallest surveillance metric that we compute. But in general, so here we have the confidence interval. The confidence interval is higher, so in general they are not building a lot of blocks. So the smaller the confidence intervals means that they are responsible for a higher fraction of the blocks. So with that, I'm gonna just conclude. So in this work, the idea was to understand what a good metric, a good definition for manipulative behavior in games look like, and apply that definition for the DeFi ecosystem. And in the end, the goal, I think, is to understand which builders would be manipulating a protocol, and there's many reasons for that. You, as a protocol designer, you might be worried about manipulation happening in your protocol. If you are a wallet manager, you want to understand, like if you're sending order flow to some builders, you want to understand like if they are extracting value or not from your customer. In those cases, these builders might be incentivized to hide the fact that they are extracting value, so you need some metric that's robust to obfuscation. So I think one important aspect of this work, though, is that manipulation is just a subset of MEV. So for example, arbitrage is not part of my talk here, right? Because there is not even, my definition doesn't even make sense when you're talking about arbitrage, right? Because arbitrage, I don't care if some other agent is participating in the game. As far as I'm concerned, I would be happy if no one is participating so I can extract the value. So this is about manipulation, not things like arbitrage. For the theorists in the room, one interesting open question is that we actually don't know if you can efficiently compute the ordering that minimizes the metric. For the empirical work, when we are normalizing, we give a heuristic, but we actually don't know how to compute the ordering that would minimize the surveillance metric. I see you, the theorist. So thank you very much. Any questions?
Hi, good talk. One question I had was, if you had a, say, builder that randomly sequenced transactions, what would that look like compared to the scores that you showed?
So in general, that would be worse. It could be better than the altruistic ones, because altruistics, they might still be ordering by fees. So in general, they might be lower, but we haven't looked on that benchmark. Yeah.
Got it. Because one of the things that I think the MEV-Boost participating entities respect is like bundle ordering from like the order flow originators, which in that case may not necessarily signal that they're intentionally like making a manipulative sequencing, but that they're just respecting something upstream. But maybe the altruistic ones don't abide by that, and they could unbundle or like reorder transactions. That's just a note. Thanks.
Yeah, thank you. Yeah.
Do these results about sequencing rules, especially the existence of an optimal valid ordering for them, do they apply if trades can trade on multiple pools, and we apply these rules to each of these pools? Like if someone could be doing a multi-hop trade?
It applies if you can break them apart. Like if it's like an atomic transaction with many trades, then no, because you could build like atomic bundles that would conflict with each other. Yeah.
More questions?
Thanks for the talk. This is maybe not exactly about your work, but relevant. So suppose you're a roll-up operator, you're running a centralized sequencer, and you want to show credibly that you are not manipulating anything. Would you say that using something like this metric would be a good way to show that, like, you're not actively manipulating, or this doesn't apply there?
So, you could use the greedy rule from that paper with Parks. That rule allows you to prove you are not manipulating orders. Yeah.
But do you need to separate like a specific type of transactions that are dealing with text with other transactions and
Also,
like?
now that's just for like AMM trade
Yeah,
transactions. Yes.
But more generally, this doesn't apply. That's what I.
Yeah, it's very easy. Yeah, it's very application specific. Yeah.
Yeah, got it. Thank you.
All right, if no more questions, thanks for the talks and also the questions. We will have a 20 minutes break on third floor. You want to get more refreshment, and please be back around 11 a.m. for the talk about block building. You will not want to miss it. Yeah, thank you.